Hi everyone. Welcome back to AI Finance Buddy. Today, we're diving into a mixed market landscape with President Trump's new tariffs stirring up investor sentiment. What does this mean for your portfolio, and how are different sectors reacting? In this episode, we'll explore today's biggest market trends, highlight the top stock movers, and uncover a crucial financial lesson that could help you navigate these turbulent waters. Plus, I'll share an inspiring success story of someone who turned their financial dreams into reality through smart investing. And make sure to stick around until the end because I'll reveal today's best buy stock pick, a potential gem you won't want to miss. Let's get started. Chapter 1, Today's Market News. Today, the market sentiment is mixed as investors digest the implications of President Trump's newly announced tariffs on Canada, Mexico, and China. While Asian markets showed a rebound due to a temporary pause on tariffs against Canada, U.S. stock futures are down, reflecting concerns over escalating trade tensions. Key sector movements: technology, stocks are under pressure as fears of a trade war loom, impacting tech giants reliant on global supply chains. Energy, Equinor ASA is in focus as it prepares for earnings, with analysts watching closely after a recent power outage at a key oil field. Consumer goods, Murphy USA Incorporated is set to report earnings, with expectations of a slight revenue decline, raising questions about consumer demand. Overall, the market is cautious, influenced by geopolitical developments and upcoming earnings reports. Now, let's look at the top 3 biggest stock movers. Murphy USA Incorporated, MUSA. Murphy USA, a leading gas station retailer, is gearing up for its quarterly earnings report. Analysts expect a slight dip in revenue, projecting $4.98 billion, down 1.7% year-over-year. Despite this, the company has a solid track record of beating earnings estimates, showcasing resilience in a challenging market. Buy score, 75 100ths. Equinor ASA, EQNR. Equinor, a major player in the energy sector, is set to release its earnings with an anticipated EPS of 82 cents. However, a recent power outage at its Johan Sverdrup oil field could impact its revenue projections of $24.4 billion. With a low PE ratio of 6.98, some analysts see potential undervaluation, but operational challenges remain a concern. Buy score, 75 100ths. Align Technology Incorporated, ALGN. Align Technology, known for its Invisalign products, is expected to report an EPS of $2.43, reflecting a modest year-over-year increase. The company's strong financial position is highlighted by a low debt-to-equity ratio of 0.03, indicating financial flexibility. Investors will be keen to see if Align can meet or exceed these expectations. Buy score, 75 100ths. Today's market activity suggests a cautious approach, particularly in the tech sector, as trade tensions escalate. Investors should keep an eye on upcoming earnings reports from key players like Murphy USA and Align Technology, which could provide insights into consumer behavior and market resilience. With geopolitical uncertainties on the rise, diversifying investments and staying informed about sector performance will be crucial for navigating potential market volatility. Chapter 2, Simple Finance Terms Explained. Price-to-book ratio. This ratio shows how much investors are willing to pay for a company's stock compared to its actual worth on paper. Think of it like comparing the price of a used car to its value in the blue book. If the price is much higher, it might be overvalued. Operating margin. This tells us how much profit a company makes from its core business after covering its basic costs, but before paying interest and taxes. Imagine running a lemonade stand. If you sell a cup for $1 and it costs you 50 cents to make, your operating margin is 50 cents, half of what you earn goes to profit. Debt-to-equity ratio. This ratio compares what a company owes to what it owns. Picture a seesaw. If one side is weighed down with too much debt, it can tip over. A balanced seesaw means the company is managing its finances well. Chapter 3, Top Stock Pick of the Day. Today, let's talk about why JP Morgan Chase, JPM, is a great investment choice right now. First off, JPM has a strong financial foundation, which means it's likely to be stable in the long run. Its price-to-earnings ratio is 12.91, suggesting it might be undervalued, meaning you could get more bang for your buck compared to its earnings. Even though it has some negative cash flow right now, it has a lot of cash on hand and a solid book value, showing it can handle tough times. JPM also has a low debt-to-equity ratio, which means it doesn't owe too much compared to its assets, and a decent interest coverage ratio, indicating it can pay its interest expenses comfortably. Plus, as a leader in the financial sector, it stands to gain from rising interest rates and an improving economy over the next year or so. However, keep in mind that the financial sector can be affected by economic downturns, regulatory changes, or shifts in interest rates, which could impact JPM's performance. Overall, JPM looks like a promising pick for those looking to invest. Chapter 4, Core Long-Term Strategy with ETF. Today, let's talk about ETFs, or exchange-traded funds. Think of them as baskets filled with a variety of stocks that you can buy and sell easily, making them a fantastic option for long-term investing. One popular benchmark for these funds is the MSCI World Index, which acts like a global map of major companies. By investing in this index, you can spread your investments across different countries, helping to reduce risk while aiming for growth. It's a smart way to diversify your portfolio. Now, here's the latest scoop on the MSCI World Index and some related ETFs. First up, we have the Amundi MSCI World 2 UCITS ETF and the Amundi MSCI World V UCITS ETF. Both of these funds recently reported their net asset values, which is essentially the total value of all the assets in the fund divided by the number of shares. This gives you a clear picture of how much your investment is worth. Additionally, the Stracker's MSCI World High Dividend Yield ESG UCITS ETF has announced a dividend of 17.5 cents per share. Think of dividends as a little bonus for owning shares, like getting a slice of pizza when you order a whole pie. So, if you're considering investing in these ETFs, keep an eye on their values and those tasty dividends. Just a quick reminder, investing comes with risks, so think long-term and avoid using funds you might need urgently. Chapter 5, Quick Financial Lesson. When deciding between paying down debt and investing, it's important to consider your financial situation. Imagine you have a credit card debt with a 20% interest rate and a savings account earning just 1% interest. In this case, it makes more sense to focus on paying off that high interest debt first. Why? Because the money you save by eliminating that debt is more than what you'd earn from investing. On the other hand, if you have low interest debt, like a student loan at 3%, you might choose to invest instead, especially if you can earn a higher return on your investments. A good rule of thumb is to pay off high interest debts first, then consider investing. This way, you're not only reducing what you owe but also setting yourself up for future growth. As a quick tip, create a list of your debts and their interest rates. This will help you see which ones to tackle first and make a plan that works for you. Chapter 6, Real Stories of Financial Success. In the bustling city of Toronto, Christy Shen and Bryce Loan were just two ordinary IT professionals navigating the corporate grind. But in 2015, they decided to take control of their financial future. By diligently investing in low-cost index portfolios, they embraced a strategy that would change their lives forever. Within just a few short years, they achieved financial independence before the age of 35. Their journey taught them invaluable lessons: the power of compound interest, the importance of living below your means, and the freedom that comes from smart investing. Christy and Bryce now share their story, inspiring others to take charge of their finances. Their message is clear: financial independence is within reach for anyone willing to learn and act. So, start today, your future self will thank you. Chapter 7, Summary and Personal Investment Strategy. In today's video, we explore the mixed market trends influenced by President Trump's tariffs, with the S&P 500 showing slight dips. We highlighted key stock movers like Murphy USA, Equinor, and Align Technology, all facing unique challenges and opportunities. We also discussed important financial metrics like the price-to-book ratio, operating margin, and debt-to-equity ratio, emphasizing their significance in evaluating stocks. We also explored a key financial dilemma: should you pay off debt or invest? We explored when it makes sense to focus on eliminating high-interest debt versus when investing might be the smarter move. And finally, we shared the inspiring story of Christy Shen and Bryce Loan, who achieved financial independence in their 30s by embracing disciplined investing and smart money management. Today's key lesson: staying diversified and making informed financial choices is the best way to navigate market uncertainty. For today, I am adding $15 to my MSCI World Index investment and experimenting with $10 in a fractional share of our suggested best buy pick, JP Morgan Chase, JPM, both with 1-to-1 leverage to demonstrate the importance of cautious and diversified investing. Before we wrap up, let's bust a common financial myth: the more financial products you have, the better. The truth is, too many accounts can lead to confusion and unnecessary fees. Simplifying your investments often yields better returns, so focus on quality and strategy over quantity. Now, for your daily task, review your current investments and see if there are any you can consolidate or simplify. As we conclude, remember to do your research, test your strategies, and consult a financial advisor when needed. If you found this video helpful, please like, comment, and subscribe. Your engagement helps us reach more people and ensures you don't miss out on future episodes filled with practical financial tips. Share your thoughts or suggestions in the comments. We love hearing from you and building a community where we can all learn and grow together. Thank you for watching, and see you next time. Happy investing!